Welcome back to Golden Rule Radio, your weekly precious metals recap and outlook for the coming week. And we appreciate you listening, and we really appreciate your listener questions. I want to jump into one here from John L. last week, who brings up the point that he is confused as to why investors are guaranteeing a year-end rally. And that confusion, in his opinion, is probably based upon the fact that we are not quantitative easing anymore, and people don't realize that because we're quantitative tightening, how is that impacting the market? So I know that has more to do with the equities guys, and we'll get to the metals, but any feedback for John?
Well, there is traditionally that assumption of sort of finagling the numbers at year end, especially in regards to employment, and then obviously the coming into the Christmas season. So I think that it's just a typical seasonal rally that most people expect to see, but that seasonal rally really is just predicated on seasonal employment and seasonal spending, as well as, like you said, the tradition of the last 8 or 10 years of quantitative easing, which we don't have anymore.
The expectation is to see an equities rally at the end of the year. My expectation according to the last 5 years, would be to see the gold price bottoming in this December timeframe. For the last 5 years, we've seen a bottoming process go on toward the end of the year, and then come January, it rallies. So if you guys are looking at timing a purchase here, this is the time to be doing so on this pullback into the 1200 range for gold.
That's really as Miles predicted last week, and we talked about, again, the entry point opportunity and the expectation for a gold decline here with the dollar rally. We'll get to the dollar in a little bit, but Miles, why don't you throw up the chart here and walk us through?
Sure. Well, and it's the opposite of John L's question here we just touched on a minute ago, right? Why are they expecting a rally? Because they want it. Why do your kids expect a Mountain Dew? Because they want it. Doesn't mean they're going to get it. So if we're used to a year-end rally in the equities, if we don't end up seeing that, then obviously we should see the opposite of that, which would be the year-end rally in the dollar and a year-end rally in the metals.
Well, you may see a year-end rally in the equities market because that's been the trend for the last few times. However, you do have a few of these major companies, Amazon for one. If anybody know what Amazon does? Yeah, that's a pretty good indication of the economy. It's down over 20%. That's official bear market territory.
Well, so, not just Amazon, Apple too.
Apple's flirting with it today. So you could see a rally off of those declines, and I wouldn't be surprised to see that just because that's what we've seen, just like what John's talking about. Gold bottoming in that time frame. What's gold?
Well, we've seen gold starting to rally since around September of this year. We took a big step up into the 1240s again. We've come back down. We saw that sort of compressing trend line both on the top side and the bottom side, which we talked about the breakout from last week. We're still pretty good above that. However, we did come into that first interim resistance level around 1215 or so, which we bounced back down from, but not very aggressively. That just happened today, Wednesday. We're still showing a green candle at the time of this recording, so we could end up just pushing right through that.
So you're saying push right through that to the upside, back up over the 1215. You're not talking about pushing back down below the 1200 from a support standpoint.
Yeah, it's very likely. I mean, we talked about coming back down and retesting that compressing pennant. We did. We're now back above it. If we were going to push below it, we probably should have gone right through it and then come back up to test it on the top side. So you're always going to move out of a range, either go above it or below it, then you're going to come back and retest that range before you continue on to the next range. We came down to it. We've broken back above it. So it's likely we could see gold putting in a 1240, 1250, 1260 top in the next couple weeks.
Well, also to John's point, yes, we could see an equities rally because we know there's end-of-year gaming, right? You get, as an equity advisor or manager or stockbroker, you get paid for the assets under management and the value of those, okay? And so it's very important to try to make those numbers climb into the end of the quarter, every quarter, but especially the end of the year. So gold tends to be beaten down in that period of time, equities rally. But I do love his point that it is a different day. The fact that we are quantitative tightening and there's so much deleveraging going on in the market, just look at General Electric. They are not alone. Okay, what does over leverage and being too far in debt do to a company or your personal finances or a country? Ask GE, right? They lost $5 billion 2 days ago in one day, and they have no more access to the paper markets. They're not selling their bonds. They've got no way to raise capital other than blowing off assets. That's what happens to you, to me, to nations. And so, it pales in comparison to Apple's $49 billion lost in one day, 2 days ago. But proportionately, it's devastating.
Moving on to silver, it's been flirting with that psychological 14 number, just like gold's been flirting with the psychological 1200 number. Real support for both of those is lower. Real support for gold being around 1165, 1170. Silver, real support would be about 13. What do we have here?
65
yeah,
or so.
That's about where the low was when we bottomed in December 2015. So that's the previous low. So we have a little bit of room here, not a lot, but silver is a buy, I would say. I mean, yes, it could go lower. It's a market. It could do anything, but it has been beaten down. And I'd say it's ready to rally after we turn the corner here.
Well, for comparison's sake, going back to that same date, gold was at 1,050. The ratio was much lower than it is now. Now we've exceeded the 85-to-1 mark, and that just shows your point to be true and how undervalued silver is.
Moving over to the other white metals, platinum still seems to be lagging a few weeks behind gold. Gold came down, retested, moved up. We said the same thing a week or so ago when platinum pushed above its resistance level. We argued we'd probably move up 880, 890 range. It stopped right at 880, came back down, has tested its support level. So if gold continues up, I would assume platinum's also going to continue up. It just seems to be the head of the carriage.
I'll tell you another bullish indication for platinum now is this is the first week that we've seen a significant change in the COT report that we talked about also last week. Platinum now has swung in just 1 month, you guys, from 8,897 contracts short from a net position standpoint. Okay, and each contract represents 50 ounces of platinum. Okay, so that's like an $8 million valuation in platinum of money banking on the fact that platinum would decline. Well, in 1 month, that now has swung all the way over, and that pendulum now is sitting at 8,381 contracts long. So for the first time all year, we've seen now this long net position in platinum, and that's actually a bullish indicator. Well, before we leave the white metals, what about palladium? It just continues to defy. It is like the immune commodity, natural gas up until, Robert's chomping at the bit to talk about that, but it had struggled. Copper, oil obviously has dropped 20%. It's now almost in bearish territory from the start of October. But here we go with palladium. It's up 32% from its August 15th low.
Sure, and after putting in that all-time high again this year, for the second time, we had that brief sell-off, but that wasn't really anything, and here we are just compressing right back up to the top.
Well, when I saw the chart of natural gas, I thought it might have been a chart of Bitcoin from a year and a half or 2 years ago. I just love charts that look like this type of thing. Natural gas today on Wednesday is up something like 17% just today. We're going to throw a chart up today. This is the chart of the week, and maybe that's a theme that we should run with, is just throwing a chart of the week. We haven't done that. We should do that.
I like it.
So that's the chart of the week. We don't have really much to say about it, except it's getting cold and the traders are loving this run on natural gas. I think the dollar index hinges on the euro because it's so heavily weighted to the euro. So what's going on in Europe is the expectation that the European Central Bank is going to stop printing. What are they printing now? 15 billion euros, which is almost $20 billion. Today, they have been doing 30 billion euros a month. And so if they wind that program down, then they would go from quantitative easing to, what do you call that? Quantitative stalling.
That's a great new term. Yes.
And then you go to quantitative tightening, maybe this coming summer. If they do that, well, what's the euro going to do? Probably rise, right? Which would probably push the dollar index down, which would do what to gold? Probably push it up.
That's right.
So I think that's what we're going to see in the next 6 months to a year, is that the not tightening in Europe, just less easing and kind of a stalling process. And the Fed did this as well when they wound down their quantitative easing program, and then they started raising interest rates,
Bingo.
Which corresponded to the bottom in the gold price.
That's right. That's the other component to this, is that correspondingly with the fact that they're going to be quantitative stalling or tightening is the interest rate hikes. Right, so that also is bullish for that currency, and I'm with you. I think in the next 12 months, that world scene will be totally different, and that dollar index will be down significantly.
Yeah, wherever it peaks out here. I mean, it's 96, 97, pushing into almost 98. Wherever that dollar index peaks out and starts to turn over, it should be forming this head and shoulders, this large head and shoulders pattern we've been talking about. So we will be talking a lot about the dollar in the coming weeks.
Sure. And if you want to get into a deeper conversation on the U.S. dollar today, I highly recommend going over to our other podcast, the McIlvaney Weekly Commentary. This week's guest was Alex Pollock, who dives deeper into the dangers of central banking and the unintended consequences that their policymaking can have on investors, consumers, the balance of the world economy. So he's a very down-to-earth author with some very poignant insights and definitely a must listen. So we'll put a card in today's show, and you can click on that card to go follow up with David and Kevin's interview of Alex Pollock.
Now that we've covered the markets, let's cover a little bit of news relative to the markets. We've seen a similar thing that happened a little while ago when Germany requested its gold back from the United States. A lot of our listeners, I'm sure, are familiar with what we're talking about. If not, you could poke around and find any articles about it. It took the United States a while.
3 years.
To deliver. A while, exactly. To deliver on that commitment. Meaning they were just keeping Germany's gold safe. There was no commitment. It was just keeping it safe.
Hey, yeah, they predated all those bars they sent to them, right? Like they asked for them in 2014. They received bars a few years later, stamped 2016. But in reality, Germany had stamped those bars 2016 back in like the 1970s. Isn't that what happened?
Or earlier.
Because those were definitely the bars that Germany had a store for them.
At Fort Knox.
So similar to that, Venezuela is requesting its gold back from the Bank of England, and the Bank of England is probably doing what any bank in the United States would do to you personally if you walked into the bank and tried to ask for $3,000, $5,000, $10,000 in cash. They'd ask you, "What do you need that for? Why do you need that money? It's not. Is it? Oh, it's your money, but what are you doing with it?" That's the experience that you'd have if you walked into a bank here. Well, Venezuela is getting the same treatment at the Bank of England where their gold is. The Bank of England is asking why do they need it?
Well, and to be fair to the Bank of England, Nicolas Maduro walking in and asking for his gold is a little bit like a drug dealer, that is a known drug dealer or felon walking into the bank asking for the cash.
Absolutely.
So you do have a little more information, and maybe it is a checks and balance and safety measure, but it ought to upset you and it ought to concern you that if you don't own your gold now, you need to. If you don't have it in hand, you really should consider having at least a portion of it in hand. You don't want to ever run into the situation where you can't get what you own. Each week we'll try to touch a little bit too on any geopolitical strains because that does move the metals prices. Right now, the hotbed in the world is Israel and Hamas. That Gaza Strip has become much more of a center of controversy, a center of turmoil and literally war. And so keep your eye on that and see if that can settle down or if it ends up escalating. If it does escalate, I do expect that to put some upward pressure on gold.
Finally, we'd certainly be remiss not to mention Bitcoin prices have dropped even further. I think we got down to about 55.23. Now, the reason this matters is because there's a cost of operations for the Bitcoin miners. And we'll talk about this occasionally if we ever see these levels in the precious metals. It costs money to get stuff out of the ground. In this case, it costs money to mine the Bitcoins. So the good news is, out to all you guys that like to buy computer parts for your own usage, those GPUs might actually start becoming cheaper again because it's no longer cost effective to buy up tens of thousands of them and set up your Bitcoin operation. You're now losing money per Bitcoin. So until that price gets back above about 5,800, you may want to shut the warehouse down for the time being.
And finally, this last week, many of you downloaded our free report about the 6 advantages that adding precious metals to your IRA can give you. If you didn't get the chance to see that report, we'll leave a download link for it in the description below. As we've covered on the show before, this time of year can show seasonal opportunities for great entry points into the market, the gold, silver market. If you have a retirement account or just want to learn more about precious metals IRAs, we highly encourage you to download this report or call us for a free portfolio review, 800-525-9556. Make sure to follow us on Twitter at ICA Gold. Subscribe to this podcast by clicking the subscribe button below. Like us on Facebook, and always you can visit our website for more information at McIlvaney.com. Thanks for listening. Have a great week.